All right, so onto the income and expenditure account. They're calling it a profit and loss account here. It'll probably be income and expenditure / profit and loss if it come up now. But it's an income and expenditure account that they're looking for. So you list all the income, add it, all the expenditure, add it, subtract them from each other, and that's your excess income for the year. Page will be ruled like this, so 2 columns will be enough. Just like with club account questions, the receipt side of this book will be the starting point for my income, the payment side will be the starting point for my expenditure, but this is a cash book, so this is just cash in, cash out, whereas your income and expenditure will be accruals basis. So we're going to need to adjust some of these figures. We're going to need to bring in non-cash items like depreciation, which wouldn't be put into the expenditure account because it's not a movement of cash. So first thing then on the receipts is members fees of 270,000, but I have a note here that I adjust those in part 3. So from additional information 3, and they were 4,200 to be taken away and 2,700 to be added on. So membership fees 270 grand, take away the 4,200, add on the 2,700, and then I should probably beside members fees have something written like statement of reserves or something, or an or for reserves, because it's the statement of reserves here at the start. This information I got. There was members fees paid in advance 3,000, so I got 3,000 this during the last period as members fees for 2016. So that 3,000 wouldn't be included in this 270 because it wasn't received in this period. But the members fees are for 2016, so they should be included in this year's accounts. So your 270, take away the 4,200 plus the 2,700 plus the 3,000 is 271,500. Then I've got interest on 3% investments, 3,000. I've got working 2 beside that. So I actually started using the proper kind of working references. So working 2. Yeah, so I had 3,000 received in the period, take away 300, which was for last year. 2,700 was actually for 2016. So that's what should go in these accounts. Investment, interest. Next up then, so shop receipts. So I did a shop profit and loss account. And I got shop profit of 27,250. So that's what should go in as income. And then I've got sale of furniture, cost 20,000, received 10,000. So this, what I'll actually put in the income and expenditure account is the profit or loss on disposal. So it's 10 grand received is why it's going in the received side. It still could be a loss. I'm going to compare that 10 grand to the book value when I sold it. So that's, as I say, could be profit, could be income, or could be expenditure, depending on whether it's a profit or a loss. So I got up as high as working 3 before, so let's just at the bottom of this do working 4, which is going to be profit or loss on disposal. So I don't have an exact period for when it was purchased, but it cost 20,000, and I'm told all fixed assets had 3 years accumulated depreciation at the start of the year. So that had been depreciated by 3 years at the start of this year. So furniture is depreciated at 20%. So the 20,000 cost multiplied by 20% is 4 grand depreciation, multiplied by 3 years, because they've been depreciated for 3 years before this, is 12 grand. Alright, you might remember then, it's furniture that's held at the end of a period that's depreciated in this firm. So if that 20 grand was sold during 2016, I mustn't have owned it on the 31st of December 16. So I'm not going to put a 4th year's depreciation, and I'm not going to, I don't know what month I sold it in, but even if I did, I wouldn't do like 6 months or 4 months or 3 months depreciation, because I'm told it's only assets I own at the end of the year that I depreciate. That's the depreciation policy. So the thing cost 20 grand and it's got 12k accumulated depreciation. So 20,000 cost, take away 12,000 accumulated depreciation is an €8,000 net book value, and then you sold it for 10,000. So you made a profit of 2,000. So 10 grand proceeds, take away 8,000 net book value. So what you got for it compared to what it was worth gives you €2,000 profit on disposal. That 2 grand is going to go in to my income and expenditure account. So it's a profit, so it's going to go up here as income. And then this 12,000 accumulated depreciation is going to need to come out of accumulated depreciation on your balance sheet. So subtract it from accumulated depreciation, balance sheet, fixed assets. Just remember that when you come to the balance sheet. So that's all the income I have. There was nothing else kind of in the notes or anything like that. So let's add the 4 of those, and I get 303,450. And then less expenditure. So back to this. So wages and salaries, 83,000, but I need to adjust that. So I have down that is, I think it's like 5 and 6. So yeah, so part 5, I was adding 4,500 on to wages, 2,700 that had gone to laundry by mistake, and another 1,800 I was told to provide for. So you're going to add a 4,500. And then adjustment 6 then it said as well. So yeah, so 60% of the secretary's wages of 24 grand were put into the shop profit and loss account. So the 24 is included in that 83, so I'm going to take out 60% of that, which is 14,400. So take away 14,400. Is there any, there was no wages due at the start or anything? Nope. So if you work that out, you're going to get 73,100. Just check that. 83,000 plus 4,500, take away 14,400. Yeah, 73,100. Next up, phone and broadband. I have a note just to look at part 6, because some of that phone and broadband went into the shop account. So phone and broadband, and the next one is insurance, and the same thing happened there. Some of it was transferred into the shop account. So phone and broadband is 1,700. but you're going to take away 400, and that's 1300. Your insurance is 7,200. 850 of that is to go into the shop, so take away 850, and that is 6350. Next up was purchases for the shop, so they went into the shop profit and loss account, so they've already gone in as part of the shop profit. Purchases for supplies for the fitness centre, a note to adjust that based on part 7. So purchases, supplies, so it's 43,200 in the expenditure, and then in part 7, yeah, there was creditors for supplies at the end, so we need to add that 3,600 on. And then if there was closing creditors, just check. Yeah, so there was an opening of €2,000 as well. So you owed 2,000 at the start of the period, so that must be included in this 43,200, even though it's for the previous year. So you're going to take that 2,000 out. And that is 44,800. Next up then, contract cleaning. Again, I have a note to adjust that. So contract cleaning, 8,300. So let's say go to part 2. Where I said there's prepaid at the end of the year, so take that out. Yes, it's for the next period, so take 600 away. And then just check the start of the question. Yeah, contract cleaning prepaid at the start, €200. So you paid €200 last year for cleaning this year. If you paid it last year, it wouldn't be included there, but it's for this year, so it should be included in the expense. So add that 200 on. And you get 7,900. Next, light and heat, a couple of adjustments there. So the starting amount is 5,600. But I've told myself to look at adjustment 1. There's heating oil at the end, so subtract that. So take away the 400. I also say to look at adjustment 6. Yeah, 300, that was to go into the shop account, so I took that away. And then just check the start. There was heating oil, wasn't there? Yeah, so 1,800 stock of heating oil. 1,800. So again, when I saw that, I probably should put like an or for reserves or something after that 5,600. So add that €1,800 on. And when you work that out, it's 6,700. Next, purchase of building is not income expenditure. Furniture, not income expenditure, so they just will be balance sheet transactions. Laundry then is 11,600, and I say that I've adjusted that in part 5. So laundry, 11,600. Oh yeah, so €2,700 wages went in there by mistake, so I just need to take those out. And there's nothing to do with laundry at the start or anything, was there? Nope. So 11,600 take away 2,700 is 8,900 for laundry. Bank loan, yeah, so the interest there is going to need to come in. So the interest that was for this year. So did I do that? Yeah, so in working 3 here. Yeah, so the 63,000 there was repaying the loan. 60 grand of that is the loan. 3,000 of it is interest. 2,400 of that was due at the start of the year, so that went in the statement of reserves. And €600 is the 3 months interest up to April 16. So it's that €600 which should go in here as expense. So loan interest €600. The bank then, that's going to go on the balance sheet, but it is reminding me that, yeah, here in they told me there was bank charges of 110 which hadn't been put through, so those bank charges of 110 should go on the profit and loss or the income expenditure. So bank charges 110 euro. Depreciation then, which is on buildings, equipment, and furniture. And on that's a Kime, yeah. So buildings for this year, I figured I calculated as 14,250. Equipment for this year, I got 16,000. And furniture for this year, I got 6,400. And that's all my expenditure. So if you add all those up, you get 186,410. Subtract that from your income and you get 117,040. So excess income. Now, in a club account, generally it's that excess income figure that I bring into the balance sheet in financed by. Okay. What you'll also bring into financed by is the capital at the 1st of January, because you will have prepared your statement of accumulated fund, and it'll be capital 1st of January, and you'll bring that in, or accumulated fund 1st of January, you'll bring it in. This is called a statement of reserves. Okay, and if you look at what you were asked to prepare there, a statement of the company's reserves brackets profit and loss balance on the 1st of January 16. So if you remember at the very bottom of say a final accounts of a sole trader profit and loss, you would have got your net profit for the year, and then you added on the profit and loss balance from the start of the period. That's what we're going to do here. Okay, so I think when I was doing the statement of reserves, I mentioned bringing that reserves to the finance by. What I actually do with it, because it's a statement of reserves, which again they remind us of the profit and loss balance, I'm going to add that on to my excess income. Okay, so add reserves first at the first 16. You have 351,400. If you add the two of those, you get 468,440, and that's your P&L balance, or your reserves, 31st of the 12th, 16. So you could call that reserves, 31st of December 16. So rather than bringing in the profit and what we have been calling capital or accumulated fund, in capital in the ordinary level questions on service firms and accumulated fund in club accounts questions, rather than bringing those two in separately, we add them together here in the bottom of the income expenditure account, and then it's this number we bring in to financed by. So that's just a slight difference with what we have done before. But that's the income and expenditure account done. And now I just have to do the balance sheet, and I'm done with the accounts part of this question.